Good morning, everyone, and thank you for joining our webinar today. My name is Heidi Hunter. I'm the Chief Product Officer here at Markaaz, and with me is Seth Sattler, Director of AML at Oscilar. And we're here today to talk about the invisible business economy, which essentially is legitimate businesses that exist and operate today, but traditional KYB struggles to identify and understand. But before we get too far into the topic, we'd love to do some quick housekeeping and some brief introductions. So we have a live Q&A running during this chat or during this webinar. If you have any questions as Seth and I are going through things, please post them in there and we'll answer them in real time. Or we also have a dedicated Q&A section at the end where we'll pick into some of the questions that you ask. So Seth, I'd love for you to introduce yourself to everyone who's here today.
Yeah, first of all, appreciate you guys having me on the webinar. I'm excited to talk about kind of a new topic, not one that we typically get to deep dive into on webinars like this. But yeah, so I am Seth Sattler. I'm the director of AML for Oscilar, which is a risk orchestration platform. We do a lot of transaction monitoring, EDD, sanctions case management, underwriting, KYC, all that fun stuff. But prior to joining Oscilar, I was the CCO of a retail crypto company and then also a payments rail company that was both domestic and international. But started my career in TradFi doing AML model optimization and gap analysis for Huntington Bank. So kind of a experience on both sides of the coin here. I'll be excited to be here and talk about everything we have on the agenda.
That's awesome. And just for me, my background spans identity risk and fraud. I have almost 2 decades of experience building consumer and business identification programs in various orchestration and identity platform companies that were both US based and global. So I've spent lots of time in my career helping companies scale up platforms, analytics, in the financial institutions, fintech, marketplace, retailers, government, all the places that identity has touched over the last 20 years or so. And maybe, for us too, Seth, talking a little bit about our partnership as well and why we're both here, because we are from two different organizations. So if we can take a look at the next slide. Thank you. Just to talk a little bit about Markaaz and Oscilar, because while I hope, Seth, after this webinar, we're now friends, it might be good to talk about the organizations we present and how we came together. So Markaaz and Oscilar created our partnership in November of last year. And the synergy that we had between our companies was that I think we both believe that visibility leads to better outcomes, right? And we're trying to help organizations go from rules-based systems and kind of traditional ways of looking at identity and helping people with visibility that leads to better outcomes. So on the Markaaz side, we're a very data-driven organization. We have really strong business identity infrastructure, data and insights that we believe is the most comprehensive listing of businesses in the world. And Seth, from your perspective on the Oscilar side, you alluded to this a little bit, but you guys are obviously an incredible platform. I love all your tech. It's been great getting to work with you guys and see everything that you're doing, but love to hear more about what Oscilar is working on and what you guys bring to market.
Yeah, and the partnership, always a big fan of partnerships like this because at the end of the day, when you do risk orchestration, you do fast real-time decisioning, and you do, even with AI being built on top of decisioning, the data being fed in is the most important part because all of that is only as good as the data structure behind it. So when we offer the capabilities to onboard businesses quicker, to make more accurate or efficient decision with onboarding, or even for transaction monitoring, where you fully understand the risk of the people and the companies that you're um, like overseeing and the companies that you're investigating, you really need that full scope data and the full lens into who these people are, which is why partnerships like this are so important. But yeah, so as far as what Oscar does, we take customer data, so core banking data or transaction KYC and KYB data, and we allow real-time orchestration and risk decisioning. So we allow them to, or customers, to use that data to onboard customers more efficiently or to do customer risk rating, transaction monitoring, fraud, real-time monitoring, all of that. But yeah, at the end of the day, it's really data in is the most important part of any risk orchestration. So
It
like I
is.
said, partnerships like this, crucial.
And it's interesting as I was, kind of reflecting on this topic today and looking back at some of the things y'all have talked about recently, externally, and what we've talked about externally. One word kept coming up over and over, and it was fragmentation, right? Y'all speak about it often. And you guys just had a great product launch in June where I forget, oh gosh, what's it called? It's the Agent Hub that you
Mhm.
guys launched in June. But one of the core pieces there was, we know that, externally in the identity space, and I think everywhere, right, particularly in the US right now, our own government is pushing AI adoption. But if you are an organization that's trying to balance growth, compliance, fraud prevention, customer experience, and now you're being pressured to incorporate more automation and AI capabilities and agentic capabilities, it's only going to extrapolate your fragmentation. If fragmentation is in either your data or your processes, it's only going to be extrapolated by AI, right? It's going to create hallucinations, outcomes that you are not expecting, right? And so I thought, it's very interesting in thinking about our topic today, and maybe why our organizations both beat that drum so much is that, you know, you really need to have confidence in the visibility of the data, the rules that you're deploying, the orchestration that you're applying, so that you can get the right picture of the entity that you're trying to onboard. And to
Yeah,
me, that
and
really, oh, go ahead. Yeah,
I
go
was gonna
ahead.
say, kind of something that my old director used to say back before AI was even on anyone's radar.
Yeah,
When you're building models, it's you don't know what you don't know.
right.
At the end of the day, that's a scary thing for anyone that's building an AML model or an agent model. So both the analyst and an AI agent doesn't know what it doesn't know. So if it doesn't have access to data or doesn't even know the data exists or doesn't have the context around what it's looking at, it's going to make a misinformed decision or a inefficient decision or just an entirely inaccurate one. So yeah, having that holistic data and especially when it's fragmented and going all sorts of places and you have to bring it in, yeah,
Big.
if you're missing key pieces of information, you're misinformed or misaligned on your decision making.
Yeah, absolutely. And I think that the having confidence, right, in everything that you're doing becomes even more challenging when parts of the economy you're looking to work with are effectively invisible by traditional methods, right? So maybe we ought to dig in a little bit into the invisible economy. When we say the invisible business economy, what do we actually mean? So this was also interesting to me when you and I were connecting before this today. I think I had a perspective on this, and you approached the topic from a different lens of the world, likely because of our backgrounds, right? So for me, when I think about the invisible business economy, what I'm thinking about is legitimate businesses in the physical world that exist beyond the visibility of the system. So for me, it's like your barber that cuts your hair, local contractors, the coffee shop that just got spin up down the street, right? For various reasons, these are legitimate entities, but they operate outside of traditional systems. And I know from your side and your background, you talk to me a lot about how you see this play out in the digital world as well in non-traditional finance. So I'd love your perspective on what you see the invisible business economy actually looking like from all the time you spent.
Yeah, I definitely think there's two sides to the story. So you have, having come from traditional banking, you have businesses similar to what you mentioned, where they're family businesses. They're kind of unknown to the historical data structure, and you don't really have too much history on the owners, the business line, where they came from. You have thin files for DBAs that just they've changed their business models, or they have untraditional UBO structures. And on the other side of this, coming from crypto and then a payment company that dealt with a lot of high risk industries and emerging industries, you have these businesses that almost appear from nowhere and are incredibly successful. And when you look at kind of John Oliver stories and all the things that are hitting the news at the end of the day, it's because there's just emerging industries that take off. You have prediction markets, you have new crypto kind of business models, you have card packs and card openings, and then you have gig workers and TikTok and Twitch shops and all of these things that
Yes,
a year ago, two
creators.
years ago, 3 years ago,
Mhm.
no one would have been like, that's a way to make money. And now all of a sudden you have people making tens of thousands of dollars a month with no history, but it's completely legitimate because of just these emerging markets. The problem with that is whenever there's a business opportunity to exploit, someone's going to exploit it. So there's a very fine line between businesses that pop up out of nowhere and are completely legitimate because they found this very impressive niche with a large market fit or a great projection out for revenue. And then you have companies that popped up out of nowhere because they're completely fraudulent and non-existent. And yeah, that's when I think of the invisible economy, it's really how do you differentiate between businesses that come from absolutely nowhere and knowing which ones are good and which ones are a bit less on the positive side.
Yeah, absolutely. And my perspective on this, my family is built on small business ownership. Almost everyone in my family runs some type of local business in the trade. I have my father and my uncles who operate in multiple states in these different trades that they participate in. And when you start looking at the type of data that you might collect or see on those individuals, it gets very complex. So I'll give you an example. If we have John M. Smith, the plumber, okay, his registered legal entity that he is filed with the Secretary of State on potentially is something like John M. Smith Holdings LLC, right? That's his registered name. But obviously, that doesn't communicate to the market what services he provides. So, out in the world, he is conducting business, doing business as John Plumbing, right? Then you go to Google and maybe he's John's Plumbing and Pipe Fitting, for example. And then you go look at his bank account and it might be J.M. Smith LLC. So how do you merge all of that data up, right? As somebody who's trying to verify John for a line of credit. But how this plays out for John is that he continuously is unable to get access to the funding he needs to want to grow his business, or it's hard for him to be a quick approval applicant for the bank account that he wants, right? So that he can start having more payment methods available to him to capture from his clients. But what's interesting about this, though, is when we look at John himself, he's likely not aware that this data fragmentation for him even exists. I think as consumers, right? Consumer identity, if you've sold it like I have for years or operated with it, Seth, it's a commodity, right? There's so much PII out there on all of us. It's on the dark web as well. But I think as a consumer, he's so used to having credit report updates. He's so used to having everything monitored and tracked. I don't think he's aware that his business is so fragmented. When you start trying to combine his public records, his credit information on his business, his registry records, he's not even aware of that. And I don't think he's aware of how to fix it.
Yeah, and I think I said this when we were kind of preparing for this webinar. Trends are very circular in compliance. So the same thing that you're talking about with a legacy business, with a plumbing company or a landscaping company, is what you're now seeing for emerging industries. So you have these, we'll go with the TikTok shop, where you have these individuals that are doing drop shipping and they're going to a bank and saying, hey, I just started this new LLC because somehow I found this product that is making me 15 grand a month, selling it on my TikTok shop. And the bank sits there and goes, well, we've never heard of you. We have no record of you. You have no tax reports. Your business was registered 3 days ago in this industry. No way it makes 15 grand a month. And so now you have these people that, in their mind, everyone that they deal with on a day-to-day basis understands that TikTok shops and Twitch streaming and all these things are
Mhm.
very lucrative business opportunities. But then you have these bankers that have never heard of it. So
Right,
there's that disconnect of, well, at the end of the day, like you should know that my business is profitable. You should know that my business
right,
exists. You should know that's a stable job. And you just have these bankers that just don't understand it. And so they're still struggling with onboarding banks and getting lending for to expand their business model and all these things just because no one's heard of them. And it's very hard to believe that
Mhm.
a company that just sells newly opened Pokemon card packs can make as much money as they
Right.
do.
Well, if they lived in my house and were around my kids, they'd know that you can make that much. Um, and so the trad system, right? The trad verification system for know your business or business entity verification, it's not a great fit for the invisible economy. And I think understanding that the power of this economy, though, and the growth in it, right? You've alluded to quite a few areas of the market in digital first and in alternative payments and creator content They're rapidly growing and scaling. I think they appeal to the younger demographic as well. So that's likely part of it, right? We've got this new population that's very tech forward, tech savvy. They live their life online. So they're very adoptive of this. They're creative in the ways that they approach it. So that's expanding and growing. But the U.S. continues to report, like I want to say, I think the numbers I heard last from one of the federal agencies was small businesses continue to be like 80% or more of new job creation in the US. And when you start looking at the statistics, most small businesses, it's a team of four or less once you start doing segmentation. So we're not talking about massively large organizations, right? It's the owner, maybe somebody in the family who helps manage the location or manage the operations or participates in providing the services, and a couple of employees. But it continues to scale and grow and be over 50% of the US economy and the majority of the new business registrations that are coming. So the impact of this community, how much it's backboning and growing our GDP and also just job rates here in the US. I mean, for a population that's hard to verify, they have a massive impact on our economy.
Yeah, no, I always say like if you walk down the street, you're seeing a lot more mom and pop shops showing up. Like I live in Chicago, and every new business is a mom and pop store that opened, or a bodega on the corner, or a new restaurant. All the kind of downtown financial jobs that you see are these tech startups that are just
Mhm.
getting off the ground, or they're incubator backed. So you are definitely seeing a driving force of those smaller businesses and those up and coming startups that are just they're going to be the ones driving the economy. But at the end of the day, it's hard to do that when you can't get a operational account, you can't get vending, you can't get a line of credit. Like if you can't get any of that, it's hard to grow from that small business to a stable enterprise one.
Yeah, absolutely. You need access. Um, so we actually just got a question in the chat, Seth.
Yeah.
So we've been asked for businesses that have limited visibility or sparse data footprints, what specific signals have proven most predictive in reducing manual reviews without increasing losses? Or put differently, what signals help you confidently approve a business that traditional KYB providers would send a review?
Ooh,
It's a
that is
good
a
one.
tough first question out the gate.
It is. I love it. So I have a perspective on this. I'm happy to go first.
Yeah, after you, and then I have some ideas as well, but I'll let you take it from out the
Yeah.
gate.
Yeah, absolutely. So I think first and foremost, it's always really good to understand the data that you were given for the onboarding at the right level. So I think a strong KYB program, it doesn't just match. I think we've lived in KYB and KYC with this concept of first I match the identity, then I de-risk it, then I shove it through a compliance model and see if I can onboard them or not. I think when we start thinking about this a bit differently, we want to lead with, okay, I was given data about this business, but help me profile it. So getting an understanding of, okay, they gave me an address. Is that a registered address? Is it an operating address? Help me understand some of the components of this business at a deeper detail and what matched and what didn't match. So I think when you lead with that component of really understanding the data that you've been given, making sure it's the data that you're expecting, when you start looking at what is hiccuping or putting things through manual review, my opinion is a lot of it starts with the profile that you had, how you graded it, and how you're trying to authenticate it against another source. So that's where I would start with.
Yeah, and obviously those are the key ones that will traditionally get you through, at least to the point where if it is a manual review, it's a very light touch manual review. The ones that, having dealt with a large number of high risk and emerging companies, is if you can find an active URL that has who is information, so you
I
can
love
see
that.
that the active URL wasn't made yesterday. 'Cause if they're saying that they came out of nowhere, but they're making a lot of money, typically they had to have had marketing and customer facing materials to begin with. So having an active URL that has historical traffic related to it,
Yeah,
having a
it's a strong
address,
signal.
a registered address that isn't brand new, because they still
Mhm.
had to have been receiving some bills and some mail prior, and
Mhm.
then just something related to any state filing and tax filing that is consistent. So if you're seeing the information from one data feed to the other that is fully consistent, and didn't drastically change overnight, again, a great sign that these businesses, even though they might be new to you, aren't new to the world,
Yeah.
which typically makes them lower risk.
Yeah, that's great. So maybe we should talk a little bit, Seth, about how these invisible businesses tend to have know your business or onboarding applied to them through traditional methods. Maybe a little bit more about what we're proposing Markaaz and Oscilar could do together.
Yeah. So as far as traditional, like you have it here, it's kind of the traditional KYP. So it's the UBO information, it's the
Mhm.
Secretary of State information, it's the validating of the EIN, it's the legacy kind of lookup of records of sales and revenue and liens and bankruptcies and all the things that you kind of dive into very quickly out of the gate and go, all right, is this customer real? Is it legitimate? Do they have a business history? And then more importantly, are they going to expose me to risk I don't want to touch? And if it starts heading in that direction, you just go into manual review. And unfortunately, because of SLAs, you see a lot of just, I won't say auto declines, but
Mhm.
if you can't find it in the first pass, you're probably just going to decline it, call it a day, especially for larger FIs that they don't need to take on high risk businesses as often. So it's just, yeah, if we can't
Yeah.
validate them quickly, we're going to move on and pass, which leaves a lot of the industry, a lot of these small businesses, a lot of these emerging industries kind of out in the wild trying to figure out what they're going to do next. So I think kind of moving on to that expanded visibility, which is where it's important, is you have that traditional kind of KYC, KYB data that you always bring, but then you have these alternative signals and this business intel that really kind of comes in. You have social media, you have their website traffic, you
Mhm.
have their officers and history of kind of what they've done prior to this business. You have their failed startups and their the ones that are their past business ventures. You have industry comparisons. You have all these other things that suggest, all right, again, this business is new to me, but it's not a scary business that we have to completely ignore.
Yeah.
And then because of that, and because of the data that you guys are able to provide, and the data that we can bring in from elsewhere, from kind of open source and adverse media and social media searches and all of that, you're able to get a more holistic picture of these businesses. You're able to say, okay, they have this individual has 30,000 followers. I don't know if that's a lot, but I'm gonna say that's a lot. They have quite a number of followers, so it makes sense that they would have enough of a footprint out in the world that they
Mhm.
might be able to do sponsorship deals and they might be able to make all this money. Or yes, it's a crypto company. I don't know the business model, but here's all these other kind of competitive analysis that suggest, yeah, this business model does exist. There's a lot of other businesses out there. Makes sense that another company would come into the fold. So because of that, you're able to get a more holistic view of these businesses and then make a more confident and kind of efficient decision. And then hopefully onboard them, get them on your portfolio. And then most importantly for my career, being able to explain it to your examiners when they come in on why they're there and why you're comfortable with the risk that you took on, even though at the beginning you might not have full picture of them, you were able to establish that.
Yeah, absolutely. And so framing back just from my perspective, I couldn't agree more. And I love alternative signals for the invisible business economy because I think that's the best way to get that extended view of what's happening with them and deepen your view when kind of a traditional KYB data method. There again, because of the issues with fragmentation, maybe their registry records are slow, maybe they haven't built a strong credit presence yet. For all these different reasons when you start leveraging in the alternative signals and additional intelligence, you can extend your view of that business, maybe resolve some of those fragmented problems that you're seeing. Because to the point you made, Seth, kind of going back to my um, bad plumber analogy, I think I have it on the brain because I need some work done here at the house and I've got a guy I need to call later. But um, like in his case, if you were to entreat and bring in the web signals, right? So if you couldn't find him through your existing traditional KYB data method, if you went to a company like Markaaz and said, okay, just give me all the business intelligence you have based on the data that I was given. If you got a stronger view on the profile of that business and understood, okay, what I actually got was a DBA and it's associated with this, and here's some additional businesses because maybe John has a couple of branches in a couple of different states. If you were able to pull in more information, the length of time he's been operating, more information about himself, if you're able to do that web check and go, okay, this is likely the same, look at the traffic, there's positive consumer ratings, you can de-risk him a good bit versus again what we were talking about on the left, more of that traditional model. he's going to be rendered unverifiable against kind of that core 4, core 6 assertion that we typically do in KYB. You might put him into manual. He's going to get that screen up that says, hey, you need to come into the branch, right, within 30 days with documentation if you want to make this happen. So it feels like it's a better outcome for that invisible business economy. And by expanding the way that you're looking at things, you're able to actually approach those folks, onboard them more safely, and most importantly, to your point, have that strong regulatory example on why you made the decision that you did.
Yeah, and for I know we have a couple people in the audience that have been asking questions around like how you differentiate between the illegitimate businesses and the legitimate ones, and making sure that when you're taking on these thin file kind of companies that you have to contextualize with additional information, how you know you're doing it correctly. And I always say it's the nuanced approach is the best one. So for me, back when I had to onboard crypto companies during the time when they were popping up out of nowhere, and you had some that were legit and some that weren't, we always said that the legitimate ones put in the groundwork without knowing if they were going to succeed. So they would have a website established before they ever came to you. They would have a legal page and a privacy policy and a contact me page. They would have prior marketing materials. The officers and the UBOs would have outreach that was publicly available, or interviews or things like that, where they had a presence
Yeah.
that you know that like they were putting in the groundwork prior to even going live, because they want people to know they existed and they want to hit the ground running in doing that. So yeah, I think things like that, it doesn't necessarily have to be templated, it doesn't have to be formulaic. It just has to be something that you're confident in doing, and you gotta get a bit creative with some of these small businesses.
Yeah, that makes a lot of sense. And I think the traditional methods, right, just in terms of the impact to the folks that are attending. I mean, if you're looking at this and you're thinking, maybe you're not utilizing, you're not trying to onboard small businesses today. Maybe you're thinking about it. Maybe you're already doing this and you're like, these are hard, they're costly. Because I think that's the other impact side of this too. I've talked a lot about the impact to the invisible economy themselves, but I think people that work in the space, at least from what I've heard from the clients that we've worked with, there's a pretty big impact to the left side as you're scaling down through that waterfall. Because to the point you just made, right, if they're not doing those things, if they're not trying to build and scale themselves up, if they are more on the invisible side, there's just loss all the way along this road. You might only be able to get 40%, 60% of your folks through traditional KYB. You might spend, five to $50 trying to have somebody in an office go through a manual review with the business owner. So it's a pretty significant impact. But on the right side, the things that we're talking about, I think it's important to say, like, the answer is likely in the data. To the point that you made, Seth, it's going to be faster for the business. The work that y'all are doing at Oscilar makes decisioning and ingesting all of this and putting policy around outcomes, it makes all of that go faster, right? Automation, but also just the value to both sides of having that holistic view, being able to look at the whole picture, and the business owner actually being able to get scaled through this rather than decline. So I would expect pretty significant percentage increase, right? By taking an approach more like what we're talking about today.
Yeah, and the goal of every financial institution should always be one, get the companies that they're comfortable with on their portfolio, but it should be to offer the services to the businesses that need them. So where you have that plumber that you that pesky plumber that keeps coming up. But yeah, they're a community staple. They need banking, they need all of the services that these FIs are offering. And it is important that the policies, procedures, and then the data backing them up is available to make sure that they're on board and get the services they need to then provide those plumbing services to the rest of their community. And yeah, no emerging industry, no new tech, any of that comes about if banks aren't comfortable with them on and can't get them through onboarding. So yeah, making sure you have that process in place and that you have data available is the only way really to do it.
That's great. And I think, for folks that are attending today that are thinking about working with Markaaz or are thinking about Oscilar or already using Oscilar today, I think that the ease of creating a program on the right with both of our organizations, um, it's a very simple methodology to get plugged up. If you are using Oscilar today, Markaaz can be added. Um, I think that's the thing that I like the most about the approach that you're talking about is we're not talking about future state. We're talking about the way that things exist today. So being able to build a very scalable and simplified methodology to approach these things with the existing capabilities that y'all have. This is already live and available today.
And you get to say you're doing onboarding in a more fun and creative way.
That is
You get
true.
to,
That is
yeah,
very true.
you get
And
to show it off. No, nothing feels better than when you're explaining it to a
yeah.
third party, saying like, look at how much cooler our program is, and how much better and more interesting we're doing it than you expected.
And from our perspective, I mean, data is everything. From my time in the space, I always liked building data products where you're leveraging multiple types of data, diversified data streams. So taking kind of the traditional KYB data set and starting to apply a waterfall of different capabilities and different data sets, like the data that Markaaz has that extends into the invisible economy and is able to find and capture what is verifiable about folks in that space. It just always is going to lead to better outcomes. And when we think about, again, folks that are trying to scale up into agentic capabilities or start taking advantage of the ones that their company's already invested in, you're getting that better bedrock of data visibility that you need so that those things really scale and return on the investment that you're looking for.
Yeah, absolutely.
Okay. So if we were to kind of wrap all this up into key takeaways, um, this is, I think, the best advice that I have to offer, Seth, and I'd love your thoughts on this as well. I hope folks maybe have gotten a sense that, invisibility doesn't always mean risk. Legitimate businesses are often overlooked just because the system struggles to identify them. But, in traditional KYB and KYC, we've always treated invisibility as potentially a high risk scenario. But to a lot of the points that you made today, that's not always the case. This is a large part of the economy, it's growing. So it's time for us to start looking at different ways of verifying the businesses that fall into that grouping. I think also too the thought that, if I can't match this through a traditional method, it's a bad business. For a lot of the points that you so eloquently laid out, and I tried to bring as well, that's not always the case. A lot of it is the fragmentation. It's the way things have scaled. It's the way data is captured. But that overall, having a broader view, including more data, more capabilities, and the way that you're attempting to verify these individuals, that confidence, right? You can really build confidence in outcomes.
Yeah. I don't know what more to add to that. Those are kind of the three big
Okay.
ones.
Well,
Yeah. No, at the end of the day, it really comes down to don't just don't make a decision because you don't have the data. That
right.
that's an injustice to your own program. So if you're rapidly declining people, or you are repetitively just missing a data point and being like, well, probably doesn't exist, so we're just gonna keep rejecting people, or offboarding clients because you're unfamiliar with the business and the business line, take the time to go see if the data is out there, and then try to figure out a way to incorporate it into your program, because you'll end up finding some of the best businesses and the most productive and successful customers on your portfolio. It just, yeah, you have to just kind of put in the work to make sure you have the data available, because at the end of the day, no model works without accurate data.
Yeah, that's great advice. Okay, so got two other questions, Seth, that have come in. So first one is you touched on this a little bit, but can you tell the difference between how can you tell the difference? Sorry, how can you tell the difference between a thin file legitimate business and something that's actually risky?
Man, you got coming in with the questions that aren't easy to answer in one sentence. No,
Yeah,
so the difference between a thin file that is legitimate and one that is kind of made up, again, it goes back to the nuanced kind of details. So the minutia between them. So when you saw, I hate to bring it back to PPP loans back during COVID, but you saw these businesses just come out of nowhere because they can get the loans, versus the businesses that need the loans that just you hadn't heard of before, but they were still um, kind of legitimate and just needed a loan to get through COVID. The big
Mm.
difference there was one, the history, which Markaaz is phenomenal at providing that information on the history of the business and the revenue and the Secretary of State filings and the addresses and the address change and all of that, and the history of the UBOs as well, seeing if they've ever even started a business or if they've ever been involved in something else. So that type of history typically differentiates it. And then also going back to just the kind of online presence and have those alternative signals. So if they do have marketing materials, or if they have a history of being involved in other ventures, or if they're a Instagram shop, if they act or an Instagram influencer or gig worker or things like that, are they well known? Because if they're making money, they obviously have to have people that know of them. So it's really just bringing in those alternative signals to see what else is out there that you can do the complete picture. Because if they just registered yesterday, their website was created 3 days before, no one's heard of them, but they're saying that they're an influencer or they are a up and coming crypto company, it's unlikely they're making revenue. But if they've been around for months and years, and they're just finally, we'll call it legitimizing or professionalizing their business a bit, by making that LLC and by getting that operational account and by applying for a credit card for business expenses, like that's a big difference because you still have that history even with the person behind it, even if you don't have it for the LLC itself.
Yeah, completely agree. I think that's great feedback. It's thin files. I agree, Seth. They're tough. They're tough for everybody, and that's where I think that data diversity is so impactful. Because to your point, you're going to have registry-based history on when the business was incorporated, who was on the paperwork, what was the name at the time. But when you start linking in other government sources, like potentially, where they leased properties, or when you're looking at their credit header profiles and what's available on them, information on the owners. I also really like what you had mentioned about trying to get that link from the digital world, because obviously, the more data that the more insights that you can stack against it, you can get a clearer picture of where your gaps are. And maybe, that's going to speak analytically to whether it's thin file due to building or thin file due to risk, right? If they've stood up an LLC, but they haven't done anything in the physical world to further that business or the digital world, I would say that's pretty high probability that's some type of shell, that's some type of holding. There's something going on there. Um, Additionally, I think as well, um, one of the things that you would likely see on something that's thin file risk is, in thinking back to the comment you made about PPP loans, there's always some type of connection point in the data that would connect that to potentially other high risk businesses, right? Because what we know with fraudsters is things scale, right? They're not just going to do something once and walk away. So there's probably a really strong data anomaly there that would be uncovered through the data records that you have and picked up on a tool like what Oscilar has, to be like, hey, there's an odd correlation. Maybe it's the same phone number, maybe it's the same website, maybe it's the same address, and we don't have unit numbers, right? So there's some type of correlating factor there that's likely going to pick up on it, would be my guess.
And another key point, especially with historical business data for the owners, is there's a big difference between a UBO that has launched 20 companies in a day or a week or a month, versus one that has 5 companies that failed previously and the sixth one, because they found that market fit, takes off very quickly.
Mm-hmm.
So if you have a company, like just because a individual has a bunch of companies in their past that they might have started, doesn't make them bad. It's really can you get the lineage of when the first company to the second company, the third company started and ended, or is
Yeah.
it they all just popped up out of nowhere, register at the
Yeah.
same time?
Timing. Yeah. Absolutely. Timing on the linkage is really important. Okay. Um, so last question. For people that rely on traditional KYB and registries today, oh, sorry, so we rely pretty heavily on traditional KYB and registries today. Um, what do you typically layer in those gaps without increasing fraud? I think we've talked about this a little bit, right? That we would say extendable data coverage like what Markaaz has. I think last time we checked, because we don't just keep tabs on registered businesses, we also keep tabs on unregistered businesses. There's something like 10 million in the US right now that we're tracking where they don't have a sense of a registry record right now. And that's some of the folks that we talked about earlier, your sole props, your micro businesses. And to Seth's point, they haven't maybe stood up that LLC yet, but they're out in the world conducting themselves under like a trade name and providing services. But so I would say extended services like what Markaaz has. Seth, any other data sets that you would recommend?
No, I think that really covers it. Aside from just Google is your friend.
Yeah,
Um, I always say that never shy away from just searching
doing
someone
a Google
and seeing what you
search.
can find.
That's excellent. Well, thank you everyone for joining us today. We really appreciated your time. We'd love to continue the conversation. So if you heard today things you think are interesting about Markaaz or Oscilar, you can find us. We are valid businesses, right, Seth? We're not invisible, so we do have a strong web presence. So you can find us online. You can find Seth and I both on LinkedIn, and there will be a brief connection email sent out post webinar as well. And we'd love to continue the conversation with you. So please respond to that. And we'll also be asking for some feedback on the webinar. So we'd love to hear what your thoughts were today on what you heard. But we appreciate you joining us today. Thank you.
Yeah, I appreciate you guys having me.
All right.